on the health insurance side, we'll stay there for a bit. So to the employees, the benefits they actually end up getting are better because the employer is able to keep, they're not paying astronomical amounts to the hospitals anymore. They're paying a reasonable, fair prices. And then so with that, they're able to get rid of copays. Like a lot of our clients, like none of their employees, they don't have copays. The deductible, the portion you pay before the insurance kicks in, that can come down. Yeah. So it ends up being better for the employees.
Let's learn how our next guest gets up, dress up, and show up on purpose. Enjoy the episode.
Hello, morning enthusiasts. Welcome to the Best Morning Routine Ever podcast. I am your host, Dr. Lunid, and today I have the honor of introducing a phenomenal guest to the show, Jarid Beck. Now, Jarid creates and manages captive insurance firms for businesses in a range of multiple industries, such as construction, real estate, manufacturing, trucking, and finance. Jarid is a recognized expert in the implementation, design, and management of captive insurance, an insightful speaker on a range of different topics. Now, we're going to find out what is captive insurance and how does he do this. So with no further ado, Jarid, welcome to the show.
Hi, thanks for having me. I'm excited to be here.
Yes, it's my pleasure. Tell us, before we get into what captive insurance is, what led you down this path? Tell us about your journey here so far.
Yeah, great. So it kind of started after I got out of college. I decided I wanted to get into the financial services, be in the, position of giving advice, that was, valued, appreciated. And I thought that meant being maybe a stockbroker or an investment advisor. So I started going down that path. And then, a couple of years into my career, I met my business partner, and we discovered this concept of captive insurance companies. And we'll get into what that is, but, we found it to be, my business partner and I, we kind of came together because we were both, we liked creative ideas. We liked things that were different, that not everybody was doing. And, so a new concept would come out, we would immediately, immerse ourselves in it and then figure out how we could make it make sense for our clients. And this was just the coolest thing that we had come across. And I mean, this is back in 2002. But, at that time decided, hey, we wanted this to be the focus of what we were doing. And we started our firm, Risk Management Advisors, in 2004. Mm-hmm. And then, here we are today doing, as you say, captive insurance companies and that type of strategic planning for all different types of businesses up and down, again, manufacturers, construction, et cetera. So, so it was really, turned out to be correct that, this was a great tool, great concept. And, the aspect I maybe didn't recognize at the time, but, appreciate now is that it was a very specific niche, where, there wasn't 50 million people doing it. There wasn't, the competition, there's maybe 50 people that do it nationwide. Wow. Right. Whereas if you look at some of the other, things that people compete in or do, there might be 50 people in the same building or in the, in the same, in the same ecosystem doing what they're doing. So I think we, appreciate it, stuck with it for that reason.
Okay. Yeah. Very nice. It's nice to always do what the others are not doing, right? So don't go against the crowd don't go with the crowd in picking something that is work for you. Then you have that space to kind of develop and grow into it. Let's talk about the need to niche, as you guys did back in 2002, and how that has propelled your success because you were very few in the field, in the space.
Yeah, I think, I think for your listeners, I think that's even more critical now.
Yeah.
It worked out for us back then. There was a book called, Blue Ocean Strategies, which addressed that topic, specifically. And I think that's even more critical today because now with, what we're doing here, the internet, a lot of the playbooks, a lot of the information is out there. And so if you're gonna, if you're gonna be good in an area, it's very difficult to dabble, right? So you need to, it's more important than ever, hey, go deep on something that adds value and is very specific, as opposed to, attempting to be, a generalist. Because I think it's easier now for everybody to be a generalist, again, with the information that's available. So, being very specific and niche about what you want to do, I think it's a helpful recipe for, future success.
Yeah, a great way to position yourself as unique as well, and be the expert matter in that area. Now, as you guys are with captive insurance, what is captive insurance and how does it work?
Sure. So what a captive is, it's an insurance company that a business goes and sets up to insure their own risks. So the concept is, so instead of paying, all businesses, they have their health insurance, they have their business insurances that they have to pay. The concept is, instead of paying that to the insurance companies and they keep all the profit, you set up your own insurance company and you keep the profits. And then you can buy, there's something called reinsurance, which is insurance for insurance companies. So that protects you if there's anything catastrophic, some big loss does happen, somebody does get really sick, you're protected. But, for the bulk of the dollars, you're putting that money back in your pocket. So simply, like, you think about, like the cell phones, and then they offer you the phone insurance, right?
Yeah.
So for most of the phone companies or the companies selling that doesn't go to, some other insurance company. It goes into their own captive insurance company, like I described. And then they build up, this war chest of money, instead of giving it to another carrier. So
nice.
Yeah, publicly traded companies, Fortune 500 companies have done it for years. Where we've kind of specialized, and others is, bringing it down to the middle market companies, closely held, business owner to business owner, sitting across the table from the decision maker type folks. And that's where we've had a lot of our success. But yeah, I mean, it's applicable for a number of different businesses.
So small to medium-sized businesses, more so you're working with, because the bigger fish have been doing it for a while. So introducing smaller businesses.
Yeah. So, I mean, our sweet spot is, probably on the low end, maybe 10 million in revenue. Up to, and then we have clients that, they're at $1 billion, plus in revenue. So our range is pretty broad now. But again, most of the time it's, non-publicly traded companies that, are owned by a family or a few business partners or whatever. That's always just worked better for us, because then we can sit, kind of like you and I are talking here, we can sit and see, all right, hey, does something make sense? And, it's a little easier to get to a decision, in the publicly traded space. It was, the committee, you got to talk to the guy who's got to talk to the guy. And it was a little bit more bureaucratic. But that was just our preference.
Mm-hmm. And what's the risk? Because RMA is risk management. So what's the risk in going and having such insurance and in these businesses?
Yeah, good question. So we'll get calls and people will say, well, my insurance is so expensive, I need to save money. I want to set up a captive, like what you talk about in the videos, or, and we say, all right, well, how much are you paying? So maybe they're paying $1 million. But then when we look deeper, their losses, their claims are oftentimes more than that, or right up to that level. So it's like, well, you could set up your own insurance company, but then you're going to pay $1 in and you might end up having to pay $1.10 out. So like if your losses are higher than, what you pay in, then it's not going to work out for you. So, in some of those cases, it's like, hey, you don't need a captive. What you need to get your losses under control, and so that's, if it's property owners, it could be their, their buildings need to be, fixed up, retrofitted. If it's a manufacturing plant, it could be worker safety, right? Let's paint the stripes around the doors so people aren't, hitting, getting hit, little stuff that makes a difference. So that's one of the big things that we look at. The other thing, it doesn't, even though it's insurance, or you're thinking price, but it's really about, you're setting up a separate company and you're building an asset, right? So you're building Well, that requires the ability to put money aside, for that rainy day. Like if you do have losses, you have to fund for it. And so if companies are tight on cash, sometimes that's no good because you get it set up, but then they'll be like, well, I got to make payroll. I got to pay the manufacturer, I got to pay my suppliers. I don't have enough money to actually fund it. Then, that would be a risk factor too. So those are probably the two main things. So we're looking for companies that are profitable, doing it better than their competitors, and in that way want to do their insurance or their risk management program in a more creative, better way too.
Yeah. What are some stuff that you've seen with the health insurance? Because I know some some have said that the health insurance is rigged, and so that kind of puts employers at a deficit and having to actually pay upfront, pay quite a bit to employee benefits.
For sure. Yeah. So that's a big one right now. And I think going into 2024, that's probably where we're going to see a lot of our calls. We're already getting them. So there's a Kaiser Family Foundation. They do annual reports on the cost of medical insurance for employers. And they publish, so for a company to provide family coverage, just hit $24,000 a year. So, you think of a company that's got, 100 people, 200 people, 500 people. Now multiply that by, 24,000 per family, 8,500 for an individual. It's a staggering, becomes a staggering sum of money. A lot of times it's the second biggest cost after the actual payroll itself. So you'll have payroll and then benefits. Two numbers, right? And what's crazy is the insurance companies, even at the rate it's at, each year they come in and they ask for more. They come in with larger and larger increases. And this year it's really hit a apex where, I just got back from Texas. I was out there talking to a company. The carrier raised their rates 39%.
Oof.
And so when you these are big numbers already, and then you increase them by 39%, it's unsustainable. And so, it's funny you mentioned like, oh, is it rigged? In a way it is. So what I'm telling these, companies is, unfortunately, this is the system you've signed up for, because it's not in the insurance company's best interest to, you would think they would want to keep the costs low, keep the claims low so that they could make more money, offer better deals to the, to the employers, but it's not really the case. So you remember when they did healthcare reform?
Mm-hmm. Yeah.
A few years back, they put in a rule where they said for a health insurance company, for every dollar they take in, they must spend 85 cents of that paying the hospitals, paying the doctors, spend it on claims. And they thought, okay, well, if we limit their profits to that 15% or that 15 cents, then that'll help keep costs down. But if you think about it, if I'm the insurance company and I can only keep 15 cents. Well, the only way to get more of the 15 cents is to pay out more dollars, right?
Mm-hmm.
So over time, if you look at the expense curve, it goes up and up and up. It's actually in their best interest to pay out more dollars over time to the hospitals, to the facilities, and then they can turn around and charge the employers more. They can justify raising their rates 25, 30, 40% because they say, well, look at all we paid out on your behalf.
Yeah.
But again, the cynical nature of it is it's actually in their interest to pay out more, again, over time. So I've spent a lot of time educating these insurance buyers on that's the system you've signed up for, right? So don't be surprised when it, kind of comes to fruition like that. So then the next step is educating, there's ways now. You can set up your own insurance company, set up your own plan, not buy traditional coverage. And there's the nice thing with, I was talking about the playbooks being available, the information being available. Same thing in the health insurance world or in the hospital world. All the data is out there now on like how much facility like hospitals charge, and some charge way more than others. So now there's health insurance companies that'll partner with employers and give you that information and say, hey, have your employees go here.
Mm-hmm.
don't go here. They charge 10 times the normal amount and they're not even that good. Go here, quality of care is good. And then what the price they charge is very fair. And then that helps keep costs down. You can give better benefits to the employees. And, it just ends up being a better outcome for everybody. So,
yeah, there's no shortage of hospitals. That's for sure. There's being able to get paid, right? Being able to get the benefits to go and use the different clinics. So it would behoove employees in these businesses to work with the RMA, to work with you and your team, right? And so when that happens, what's a typical structure of a captive insurance company? What's the typical structure?
Yeah, so on the health insurance side, we'll stay there for a bit. So to the employees, the benefits they actually end up getting are better because the employer is able to keep, they're not paying astronomical amounts to the hospitals anymore. They're paying a reasonable, fair prices. And then so with that, they're able to get rid of copays. Like a lot of our clients, like none of their employees, they don't have copays. The deductible, the portion you pay before the insurance kicks in, that can come down. Yeah. So it ends up being better for the employees. The challenge for them is it's different. They're used to, they're just used to the insurance companies that everybody knows about. And they're, so it takes, we have to educate them on like, hey, this is just a little bit different structure. There's a little bit different rules on how it works, but ultimately long-term, it's better for everybody. So that's on the employee side. For the employer, it's basically, instead of just writing a check off to the carrier every month, they're now, their insurance company or their company is taking, a portion of the risk that comes in. So when the claim, when the hospital actually bills, the company that administers it for them is actually, it's their money that's using it to pay it. So you get real transparency on what you're paying, why you're paying it. And then there's that reinsurance I was talking about up and above for those times when somebody really is really, really, really sick and is going to rack up charges no matter what. They've got that reinsurance to protect them. And that's our job, is to sit with the company or sit with the employer and structure that and make sure it works for them.
Yeah, and entrepreneurs are all about that, especially when they're growing and scaling, and their team is expanding, right? They're adding more people to their team, especially in the States. Benefits is a must. Employee benefits is a must-have, and so it's good to know that there's an alternative, to bring that cost down.
No, you hit it on the head. So many of these companies, companies are able to grow faster now. They add bodies, they acquire, they'll do acquisitions, right? They're acquiring companies. And if your benefit costs are out of whack, then, it's going to make the organization, the entity less valuable. So, that's some of our clients. They've enjoyed that. We've structured the plan for them, and then they're going to do acquisitions. And what they're finding is the companies they're acquiring, their benefits are double the cost of what, theirs are. So when they bring them over, there's immediate additional, savings. And then the employees are happy because the benefits are richer. They're like, oh yeah, this new company's plan is way better than, what I had before. So, so again, it ends up being a win-win. So it's really just, the challenge is really just getting people out of that mindset. Like they're so used to like the way it's always been done. And, so they just can't wrap their head around, it takes a second to wrap their head around like, oh, there's a different way to do this. And, but, it's like, hey, we used to have keyboards on our phones. Now it's, like there's an evolution that happens here, and the health insurance side of it, unfortunately, is
dinosaurs. They're dinosaurs.
Yeah, exactly. It's, kind of stuck, covered wagon type stuff. And, hey, we're trying to get the car out of the garage here, but
and then if a lot of companies, startups are looking to get funding and VCs, sometimes that does come up. What's your scale? What's your growth look like? And how do you keep overhead low? And that would be one of them that you would help with. So I want to talk about why some companies are not successful with self-funding. If you can chime in a little bit on that.
Yeah, I think Probably the main thing is kind of not having a long-term horizon on it.
Okay.
So the way most companies buy, insurance or buy a lot of stuff, they look at it in these 1 year silos. Okay, these are my rates for this year. And it's like, all right, well, you don't plan your business in a one, everybody's got the 5 year growth plan, the 10 year, the 10 year plan. Right. And so we take that same approach with the risk management side of it. It's like, all right, well, in any 1 year, yes, a lot of people could get sick and maybe you didn't save what you thought you were going to save. Right. That didn't work out. And so, we've seen people in the past, they'll have the first year will be bad. And then they'll throw the baby out with the bathwater and say, this didn't work. And then they'll go back to the old models. And then, but it's, having that longer term, time horizon, because, one of the advantages, again, there's more transparency, you get data, you can make adjustments, and then, build towards that success. So I would say long-term outlook, don't look at it siloed off in, spreadsheets that, are only, projecting 1 year because it's a long-term game. And then the other thing is, have the willingness to make those adjustments, like be proactive, be receptive, and it's not on them to figure it all out. That's part of our job is to, be the consultants, but when the opportunity presents itself, like don't get stuck in old ways. Like, man, I that sounds new, it's like, no, so you have to be willing to, to make those adjustments, because for better or for worse, the government requires employers of a certain size to provide these benefits.
Right.
So you're in that business, whether you want to be or not.
Mm-hmm.
And if you just ship the money off to a regular insurance company and let them handle it, they're not working in your interest. So you're delegating it to somebody who's conflicted, right? For better or for worse, you're in the game. You gotta put attention, put eyes on it. Because again, there's ways to solve it. You just gotta be open to it.
Right. And think long term, not just the siloed year after year
Exactly.
projection. Let's talk about your morning routine. How do you get up, dress up, and show up?
I love that. I love to get up, dress up, show up. So that changes for me. I think it's super important to have a morning routine, but to not necessarily be too rigid in it. So it's adjusted over time. I mean, it used to be, I would get up, before the sun was up, get to the office, and then I would, sit down, have coffee, journal, and then, review and plan my day, and then meet with my team. And that was a great routine for a long time. What I've adjusted now, and my main rule is getting up before I have to be up, and just having that hour or hour and a half to, sit, have my coffee, and then almost just not, just like kind of rebooting a computer. Right. So it's like, all right, I've slept, I've rejuvenated, I get up, and now let me just boot the day up. And, anything left unplanned, put the plan, sort of mentally put the plan together. I've found that, even if I have stuff to do, a bunch of stuff to do, if I have a plan for doing it, then there's almost no anxiety associated. Right. Yep. It's like, okay, hey. So just having the plan is really the anxiety relief, much less than, checking the stuff off the box. So, it's kind of starting that up. And then I'll get into some sort of stimulating activity. I'll play, maybe some chess or, just do some, kind of mental warm up stuff or, or read. So I'll either, switch between, that type of stuff. And then, I grab my workbook. I'm a big fan of the tactile, got the plan. I can't really see through but, just, my favorite one right now, it's just kind of day by day, and it's kind of identifying that big three, like, hey, what are the must do's? And then it's got, sections for just kind of rolling everything over. And we have the portals, we use Salesforce, we have, Teams and Slack and all that stuff. But I love a good, just tactile notebook where, things are planned out. And then kind of once that's set, then I'm off and running. So,
Yeah.
but if it's,
I love that.
yeah. But if it's a spot where, if that time gets pressed, then, you skip those steps, you're rushing through it, then, as we all know, like the day is not as, the day is not as smooth. So
No.
for me, it was really, this is one thing that's changed over time too. I realized like I actually do my best work at night a lot of times.
Mm.
Right. So, it's in the evening before bed or hopefully not at 3 a.m, but, where my problem solving really kicks in and, or I, will really have a willingness to sit down and grind on things, which is weird. Right. But, I'll plan for that too, knowing that like, hey, I'm probably going to I might work late into the night here. So then the next morning, because I don't want to shortcut my sleep, right? I mean, I still want the 6 to 8 hours. So I'll structure the next day or the days where it's like, all right, well, maybe I don't have that first meeting till 10. And then that way I don't have to, I'm not getting up at 5. And I have that, lucky enough to have that flexibility. Like I don't have a clock, we don't have clocks that we punch, for other people, but I'm just conscious about structuring in like, okay, hey, this is going to be the best time for me to dig in and do this, this type of work. All right, well, let's think about that in the next day so we can still wake up, have my morning routine, and then, kind of hard charge it throughout the day, even if that day, even if that goes till 10 at night or 11, before I'm going to, stop working. So,
yeah. Yeah. I like that you said it, don't be so rigid to it. And it does change depending on the season of your life, depending on where you are, where your business is at, right? It may require that you have a team powwow meeting every morning. So that changes and how you show up for that. And what was key is having to wake up before you have to get up, right? Waking up, giving yourself that extra half hour, that extra hour to just kind of get in the zone, clear your mind, reboot, as you said, like rebooting a computer. It's imperative because once the day gets away from you, it runs you.
yeah,
It's now everybody else's agenda. It's not so much yours, especially as an entrepreneur.
absolutely. Yeah. There's a book called The Road Less Stupid.
I'm not.
Yeah. It's Kevin Cunningham, The Road Less Stupid. And he basically talks about, well, the story is centered around, he was, built a, multi-million-dollar property portfolio, very successful, lost it all by being stupid, and then has since like rebuilt it. So he's basically a mass, but the whole book is, not making the mistakes he made, but what he continually talks about is just scheduled thinking time.
Yeah.
Whereas nothing else, like, but just can't like, hey, I'm just going to, so that's kind of that version of what I'm doing now is just like, all right, well, hey, I'm just going to sit here, and just think on things and not have a phone in my hand, not have an email I'm responding to, but just, think about the issues of the day, whatever that may be, or month, but that's been helpful. You touched on, it says something, it does change based on like the season of your life, right? And part of the reason I'm finding some joy in working like the night hours again, oddly, so my son just started high school. So, he's going to school, he's going to practice, and he's got tough classes. So he's a lot of times at night, he's grinding on homework, and part of my, your why changes over time too. And part of my why right now is like, all right, setting a good example. So if he's sitting there grinding on his homework, like I've made like the conscious point, be like, all right, hey, let me get my stuff out. I'll grind with you. Every day is not a week, every day is not a video game day, right? In his case. So I'll sit there and I'll save some work, or his basketball practice is right around the corner from my office. And so I'll make a point, I'll go to the gym in the afternoon, I'll come back, and then I'll work until 9 when it's time to pick him up. And he knows like I'm coming from work, to get him. And then we have that conversation about like, hey, how did you put in the work today? So, and so I've like found some real alignment in that, whereas before it was always, like, I got to get out of here because I want to get home to my family. Now I've just sort of, kind of lined
it in.
Yeah. And it's working well. So, and that, but that routine wouldn't have worked, maybe 5 years ago or at a different point in my career. So yeah, it's, I think the key is being flexible with it, making sure something works, but just really like being intentional, not doing it on accident, right? Not letting other people control your time, where it's more like, hey, I'm doing this, I'm doing it for a reason. And kind of having that control and that plan. And I think that's the big thing.
Yeah, absolutely. Thank you for sharing that. Yeah, it changes and you have to be in alignment and be able to blend it in and make it work for you. And that's the beauty of it. Once you have a routine that works for you and the family and your partners and your business, then you're at flow. It's great to see.
Yeah, no, exactly. Yeah. Getting into the flow state, right?
Yeah.
Easier said than done, but
Jarid, tell us, where can we connect with you? Where can we find you?
Yeah, we just relaunched our website. It's www.riskmgmtadvisors.com. There's a lot of great information there about what we do. Also very robust YouTube channels, LinkedIn, tons of great information. And those would certainly be the best ways.
No, perfect. Thank you for sharing. Jarid, it's been such a pleasure having you on the show today.
Yeah, it's been awesome being on. Thank you so much.
Of course.
Hope you enjoyed today's episode. Please comment and tell us what was your favorite part, your favorite habit that you are going to try out for yourself today. Comment below. If you haven't already, be sure to subscribe. Until next time, I will see you at the top of your best morning routine ever. Stay blessed.